Good day, everyone. Welcome to yet another episode of Tuesday Money Talk, your financial literacy podcast where we help you build wealth over time. Good day, everyone. Welcome to yet another episode of Tuesday Money Talk, your financial literacy podcast where we help you build wealth over time. And today we have a very, very special guest, a special guest of honor, in the person of Taiwo Adegbulugbe. I'm sure you all that are regulars here will have missed her. She has been off for a while, but we are glad to have her back.
Thank you.
So Taiwo, welcome back.
Thank you, it's good to be back. Happy New Year!
Yes, Happy New Year, Happy New Year. I've missed you. I'm sure our regulars have missed you also.
Yes, I've missed them too.
Yeah. So I am your co-host UG, and this is Taiwo, and this is Tuesday Money Talk, the financial literacy podcast where we help you build wealth over time. So this
episode, we're just going to be focusing mostly on a recap.
You're just doing a recap of.
So just going to be a recap. So my wonderful participants that have been there with me from January till now, today is just going to be a recap. So for you guys that didn't, weren't really there from start to now, you have a fair idea of what we did from January to now. So today, we're just going to be doing a recap from January to December, to our last podcast in December, right?
Yeah. So
Eugene, should I start with you?
Yeah, start.
Okay, so our very first topic in January 2025 was setting financial goals. I think it was apt. We're thinking, what can we talk about? Like he said, this is more like a financial literacy class that breaks it down to very simple terms. We don't try to use all the big bash of the financial industry or the financial world, all the financial terms. So basically, what we discussed in January was setting financial goals. Yuji, tell me, how did you do?
Yeah, well, did I miss my financial goals? I don't know. Let me throw the question back to the audience. Did you guys meet your financial goals? But for me, I can say it's in two parts.
Yeah?
Yes and no. Yes, because I met my consistency goals. Mm-hmm. I made a promise to myself that I was going to be consistent last year. So I was able to do that every month of the year of 2025. I was consistently putting money away towards in my investment account. So at least I met. But in terms of the amount that I wanted to do,
we always all want more money, don't we?
Yes. My savings ended up saving me.
I like that.
Yeah, my savings ended up saving me. So I was dipping my hand, every now and then.
Into your savings?
Yeah.
Okay, so thank you so much, Gigi. So for me, I think, I started the year out with, first and foremost, I defined what goals I was trying to achieve financially. I had that goal. I had it written down somewhere. And I was like, okay, this is my target for the year 2025. And what I did was I also had a time frame set for it. So short-term goals and long-term goals. But I was trying to see if I could do something more around long-term goals. So I tried to break it down in different portfolios. I think I'll give myself a pat on the back. This year, I started doing more of long-term investments, especially in the capital market. And it was information that we gave the house participants as well, based on all the happenings in the beginning of the year. We all know that rates were high in the beginning of the year. And because rates were high, the capital market too was, it wasn't as high. It was a good entry point, as of January. That was a good time to start buying. And I think we told people here. So I was able to make some moves. I bought some, stocks, and that I don't regret buying. So I had my short-term goals. I had my long-term goals. Then I also tried to make my goals achievable, attainable. Then what I did going forward in the year 2025 was I started to monitor, my portfolio. So there was monitoring where I had to make other decisions. I took decisions. So I was consistently, and I think that's what we taught people, that you have to define those goals, put a time frame. It has to be categorize your time frame, create your budget, so you know how much is coming to you in the course of the year, and based on that, like you said, you are setting aside XYZ amount. So yes, I think for me, we always want more money.
Everybody wants more.
We all want more money.
They say even Dangote they find money.
So yes, I didn't meet it exactly, but at least I think I'll give myself a pat on the back. I think I was disciplined enough. Okay, so that was in January. Yuji, what did we discuss in February? Can you remember?
So yeah, we discussed how couples can build wealth.
Love season.
Yes.
It was a love season. Yeah, that's true. Couples can build wealth.
We're heading into another love season. So,
and I think there was a very interesting question at that point. I think at that session, someone asked if they could decide to run a joint account with their lover.
Yeah.
Maybe not their committed lover. Maybe like a boyfriend or a girlfriend or their partner. And we were like, what was our recommendation? That's up to them, isn't it?
Yeah, it's up to them. It's a free word. Yeah.
It's a free word. But really, the truth is, when two people come together, it's easier to build wealth. When you pull funds together from two, you have your income coming from here, I have my income, and you're both committed and honest. It's actually a beautiful way and a very easy way to build wealth. Generational wealth over the years has been built in this, in that form, where you have maybe siblings come together. Apart from couples, it can be siblings.
Speaking on that, I read an article recently that said, still on what we are saying, that the richest families today are families that do not let their wealth go outside.
Correct.
Like they combine resources, combine wealth, and they have one expense as a family. Instead of we are 10 of us are paying 10 different rent, 10 different utilities,
Correct.
10 different...
Exactly. So you guys can consolidate that
wealth. Yeah.
And then really...
And it was a very interesting read. It was a very interesting read.
Because really, the truth is, Yuji, you have two people pull resources together, right? Assuming, let me just you want to invest in real estate, right? And real estate, say, the land you want to get is about 500 million, right? And someone has, maybe a sibling or a husband has that 500 million and ties that entire 500 million down into that. It's a fixed asset, isn't it? Into that fixed asset, right? As against 5 siblings coming together with, what's that? Maybe 50 million each, less than that, 25 million.
500 million, 5 siblings, 100 million.
Yeah, each. 5 siblings come together with 100 million each, equity contribution, buy that land, develop that land, and then share profit. They can achieve more. Yeah. Or a husband and wife come together with, say, 300 or 200, right? Or for those of us that also said we're trying to meet our financial goals, husband and wife coming together and pulling funds together. I think
your goals quicker. Yeah.
Quicker, right? And cheaper. It's just like the mutual funds.
True.
Expenses are less because it's shared.
Shared, yeah.
So we have another season of love coming. So please, but shine your eye when you're doing
and this season of love, to all the lover boys and the lover ladies out there, you can buy, instead of gifting chocolate and flowers, we are tired. And tell you ladies that give singlet and boxers, this is your time to shine. Yeah, so you have the opportunity now to buy a voucher, a mutual fund voucher. So it's basically opening a mutual fund investment account for your partner, and doesn't necessarily have to be your lover. You can buy for your brother, your sister, your mom, your dad.
Your loved ones.
Your loved ones in general. So you can buy them a mutual fund voucher. It's you opening an account for them. So it says a lot. It tells them that, oh, I'm interested in our future, your future, your financial future, your financial growth. Really. So invest in love this season. Buy. And here's the sweet thing about it, the icing on the cake. let me give my mic closer. Icing on the cake is if you buy that voucher worth 200k and above, you stand a chance to win an all expense paid dinner for two at a 5-star restaurant. So yeah, you can reach out to anybody on Comercio Partners. You can reach us at client.experience@comerciopartners.com, and would put you through on how you can get the voucher for your loved ones.
Or you can scan our QR code at the end of this
Yes.
session, and then
Please do that.
you'll be able to find out more. So yes, like you said, love is not only about romantic love. I think that's what we always get wrong in the season of, the Valentine's season.
So you will not blame us. A huge industry has been built on
Romantic love.
Yeah, on romantic love. So it's that industry, the machine, are trying to extract value because they know value can be extracted.
You can unlearn what you've learned. Valentine's season is beyond romantic love.
Yes, it's actually beyond romantic
It is your
love.
loved ones. It can be your parents, your siblings, your spouse. Yes, beautiful. Your boyfriend, your girlfriend. Yeah, that's okay. That's fine. But it's not only about romantic love. So please get a voucher for your loved one. Your child, your daughter, your son. And show them that you really truly care.
Your parents too. It's
Your
not every
parents,
time
yeah.
your parents are buying things for you. Buy for them too. Buy for your parents.
So now we are up to March, right? What was that our topic again in March?
So March, we spoke about the impact of Trump tariff.
Oh yes,
Yeah.
it was the tariffs. Yes.
No, Trump was on the roll. He was on the roll.
Honestly,
And-
we started feeling the impact of Donald Trump's,
I knew it was a two-part
his
topic.
regime, yeah.
We spoke about the impact of Trump tariff and also the effect of Ponzi schemes
Oh yes,
and fallout of Ponzi schemes in Nigeria.
correct. And then we said we kind of linked that together, saying as a result of the impact of one of the fallouts from the impact of Trump's tariffs might result to Ponzi schemes.
We see more Ponzi schemes.
More Ponzi. And why did we say that? Because we said people are going to offer higher rates than what's obtainable in the market, trying to attract investors.
Investors, yeah.
And one thing we also said was that during the Trump, these tariffs, I think the tariffs was placed on, Nigeria was inclusive. Let me just look at our
Trump
notes.
was on the road that period. He
He was
was giving everybody,
he was giving
anybody
everybody
that comes
hot,
to collect.
hot. He was giving everybody hot,
He
hot.
was giving everybody,
It
he was on
good.
the road.
And I think one of the things we said that time was that we saw a kind of hike in exchange rates.
Yes,
I think that was also something we noticed. And the Apex Bank did a lot to try and stabilize. But that period there was a hike, and
There's a lot of volatility also
Yes.
in with other US equities. So a
yeah,
lot of
correct.
volatilities.
Oh my God, it was crazy.
It was crazy.
It was crazy. And then because of our export proceeds, it affected our export inflows.
Yeah.
Because of those tariffs, whatever was exported from Nigeria was treated like import in the US,
yeah.
and it was tariff. So those prices were pushed back. So it also reflected in inflation.
Yes.
Inflation was also a bit was on the high side within that period. But thankfully now I think we're beginning to balance out. What do you think?
So I think we're going to balance. And the Apex Bank has done a lot. As much as we all like to yab the Nigerian government, they tried last
Yes.
year. They tried.
They tried though.
They tried. They tried to defend the naira with everything they got.
They
actually
tried. It was tough.
It was tough.
There was a lot of, for people that had their savings in naira because of the inflation, it wiped out the true value of their, their savings.
Yeah.
So your savings, with whatever returns
And
you
that
are
period,
getting,
exchange rate was
crazy.
Was
It
volatile.
was volatile.
It was too
You know,
volatile. It
was-
was crazy.
what's it called? The returns on whatever savings or investment couldn't really match the rate of inflation, But at least it was trying to cushion it a bit. But
Yeah.
So,
It's now
yeah.
exchange rate is there's some
yes, you
semblance
can
of
plan now.
Yeah, there's some semblance of stability.
Yes, we can plan now. At least you know that it's been averaging around 1,450, right? I think 1,450, 1,475
Yeah.
within that range. Kudos to the Apex Bank.
Now. Yeah, kudos to them.
Kudos to the Apex Bank. Kudos to the Apex Bank.
Then what do we even speak about in the month after that? April.
I think April was It was still on Trump's tariffs because we had a lot of engagement.
Yes, we had a lot of engagement.
There was so much engagement. So people wanted to know how that will impact us.
And how we impact them specifically.
And then what opportunities. So I think for Europe on instruments, prices went down.
Yes, prices.
So it was a good thing. Then most of them were selling, I should think I should have been, most of Eurobonds were selling at a discount at that point in time. Yields went up, prices came down
so it was a good
around that period. So it was a good opportunity and I think that's what we're telling people that, okay, there's always an opportunity in any downtime in the market. And those things don't last forever.
They don't.
They don't last
took
forever.
advantage of it then.
Yes.
Took advantage of it
Correct.
then. And these are hints inside, we like call it inside information,
yes.
but these are little nuggets of wisdom you gain by listening to
this
Tuesday morning.
Yes, yes. People that took advantage, that also took advantage of before now. People that took advantage of the high rates. Last year, when rates were high, I mean, they're smiling now.
People that locked in investment at those very high rates.
Yes, they're smiling now.
They're smiling now.
So, May was on Sukuk bonds and ethical investments.
So that was another, I remember that was another topic that was really, a lot of people were really interested in that. It got a lot of engagement.
Yes.
And because a lot of Muslim folks that want to invest, but because they are concerned, they have religious concerns, they don't know how best to do it. So we broke down the differences between halal investments, the various kind of halal investments. What is riba?
Yes.
So if I explain what riba is, we really went in depth. And you guys should listen to this recap. No worries, you can find all these episodes on Spotify.
Everything on Spotify.
So
everything.
You can
listen
go back to
those
episodes and listen to them.
Honestly, this will also help you make informed investment decisions, And
I remember that period, federal government released a Sukuk bond.
A Sukuk bond. And the funny thing about
it ended up being oversubscribed.
Correct. And the funny thing about Sukuk bonds is that most times, because most investors that subscribe to Sukuk bonds hold those bonds to invest to maturity.
Yeah.
So it's even so hard to get it in the secondary market. So if you are here and if you made use of the information you got from our sessions, you'll have known when to come to bid and to throw in your bid for. It was oversubscribed. In fact, they returned some people's.
Yeah, was oversubscribed. A few of our ardent listeners that usually join
and
us.
And the barrier to entry was quite low.
Yeah.
The barrier to entry is quite low for Sukuk bonds as compared to others. So, like I said, you can listen to everything on Spotify and then you just track down what happened within that period.
So for June, we spoke about risks and risk management, knowing the type of investor you are. Am I a high risk taker? Am I a medium risk taker? Am I a low risk taker? Because that informs the kind of investment you do. And we notice that a lot of Nigerians don't even know themselves.
And that's why they fall into Ponzi schemes.
Yes. We see a lot of Nigerians, they are not risk takers at all, but they are doing very risky investments.
Very.
And that's because they don't even...
So how do you know a risky investment?
How do I know a risky investment?
How do you categorize an investment as risky?
Once return is high, the risk is high. The higher the return,
so
the higher the risk.
So how do you categorize a high return? How do you know a return is high?
So how do I know a return is high?
Yes.
Okay, so I'm a bit biased because I'm in this space. Okay. So I know what the average return is supposed to be. But in all fairness to...
No, but I don't think... I think that's correct. It's not even about being biased. It's the honest truth.
So in all fairness to other Nigerians that know nothing, if they hear... monthly return of 25% per month. To them, it may be normal. They may
see it as normal.
Yeah,
correct.
They may see it as normal.
Correct.
They may not necessarily know that that's
correct.
A high.
No, and I think in this class, in this sessions, I think in the previous year we spoke, elaborately around about MPCs and the MPC, the MPC, and all the monetary policy tools. MPR rates and how that, should inform your decision. And these things are open to everybody. We taught everybody how to go and look at it. And these things should inform your decision on what rates you're getting, really.
And
because
each time the MPC
holds
and they have a new rate, we always post it on our WhatsApp channel.
Correct. We post it. So those rates will inform you to know if you're taking a risk, right? So we don't get us wrong. We're not saying don't take that risk, but know you're taking a risk.
Yes,
if someone is telling you that whatever rates they're offering you is not per annum, is a flat rate on a monthly basis, and and you're keen into that particular investment, right? You should ask more questions, and you should know that you're taking some form of risk. So for that kind of investment, I'll just suggest that you do it on the short term and do what we call liquidity test. Don't just keep rolling over your money. You can do it 2 months and just say, send them a mail, please. I need my funds.
ASAP.
I need my funds ASAP. If they are giving excuse, they are saying this, they are saying that, they are delaying more than normal, they know that So
and once you're jumping into risk investments, carry at the back of your mind that anything can happen.
Yes. Okay, so let's quickly move on. So in July, it was real estate industry in Nigeria and the opportunity in fact,
That was another
mind blower.
Yes.
Yes. Because someone was asking me the other day, they said, Taiwo, why is it that real estate is just growing exponentially?
A lot of people have been complaining on TikTok, on the whole of Obasanjo's internet every day. That's not well with agents in Lagos. But is it just agents in Lagos that are causing this hike in?
It's not just the agents in Lagos.
Because there was someone that did, let's say, a comparative analysis. It was like, this house in Ikoyi costs much more than a house in, I think, in Texas in the US. And they were like, what? Like, why should a house in Lagos, Nigeria?
And it's not as if it has the same infrastructure in place.
It costs more than a house in the United States.
Well, that's our country. But as an investor, it's how can you take advantage of it?
Yeah.
Because it's going to continue.
It's going to continue.
It is going to continue. People bought land in 2020 in Banana Island. They bought those lands for like 500 million. That same land will probably go for about 3 billion now. Correct me if I'm more in the real estate space. And as investors, what you should be thinking is, how can I take advantage of it? I think we spoke about rates.
We spoke about rates. We spoke about, we had someone that's in that space, a very detailed analysis. He came in, broke it down, spoke about the opportunities, spoke about rates, spoke about even the hotspots where you can start to target as somebody looking to break into that space, and how you can, even with your little money, how you can come into investing in that space.
And also how you can do due diligence. I think that was also very important.
Yes, that due diligence was also very, very important.
Yeah.
Because a lot of our audiences even ask questions on due diligence because they were like, oh, I buy land tomorrow, Money sells my land to someone else. How can I, mitigate all those risks?
So due diligence was also something we really looked into. And that was in July. August, what was it?
August, what did we start speaking?
It was on our fixed income fund.
Yes.
Spotlight on the fixed income fund. Yes. So the fixed income fund.
Last year.
Yeah. So really, I think the fixed income fund, if you haven't considered it, please listen to the podcast. Listen to that previous go on Spotify and listen to it. Fixed income fund is for people. Now, this is January. You're setting your financial goals. If you're setting your financial goals for long term and you're looking for a lower barrier to entry, the fixed income fund is perfect. You are ultimately investing in bonds, FGM bonds. Now, for you to invest in a bond in the first place, you need to have at least 50 million or 100 million, right? But with this fixed income fund, you have that's the same benefit for as low as, I think it's 10,000.
Yeah.
Not I think, it is 10,000.
Yes, it is 10,000.
And then you're paid,
as low as 10,000.
And then you're paid.
You get the benefit of as if you bought.
And then for cash flow too, it also provides room for cash flow because twice a year you're paid coupons.
Yeah.
Yeah. So it's something. Please listen to. Go on Spotify, and then that was our topic for the month of August. September, Eugene.
Yeah, September we spoke about what to do when you're scared of losing money while investing, and a lot of Nigerians, that was holding them back really from investing in the capital markets. That was really holding them back.
Yeah.
Fear of, how do I lose my money?
Yeah.
How do I? So Nigerians, we are very fearful. And what mind boggles me about Nigerians is we fear a lot, but at the same time we end up doing a lot of very risky investments.
Honestly.
We are fearful, but at the same time, like,
honestly, because I don't put more money. But you don't take risks.
We end up doing very risky investments.
Yeah. So just to buttress what you said, I've spoken to a couple of clients in the past, and you tell them that, look, this is a good time to start looking at the capital market, right? As in, I'm talking of last year, right? Even now, half year when elections are coming in, when campaigns for elections start, investor sentiments will be looking at, is it going to still be the same administration? Is it okay? So it's definitely going to affect stock prices, and as a result, it'll be a good time to go in. Prices might come down just a bit. So last year, when money market instruments were doing crazy rates, the capital market was a good time to also come in. And I was talking to a couple of clients, and they kept on mentioning the bubble of 2008. And they said, I know, they're afraid. They've gotten their fingers burnt before. They don't even know they're not doing anything stocks again. Nothing again. And you see, those are part of things that affect, when you're afraid, right? Because you've gotten your fingers burnt in the past. The best way to handle those things is doing research.
Yeah.
Asking questions, finding out, talking to people.
Yeah,
do your due diligence and starting small. So, for example, if you got your fingers burnt in the stock market, like in 2008, that's like donkey years ago, right? If you got your fingers burnt, right, in the capital market at that point in time, and now you want to go into it, you can start with as low, and that's a wonderful thing about that space. You can start with as low as 50,000, as low as 20,000. Just start little, take baby steps. So the thing about Nigerian investors is when they are scared of losing money while investing, they always want to go with the big money. So you have all your savings. We taught you guys here how to, diversify your portfolio. You carry all that money. Maybe it's 1 million you want to save. Carry the whole 1 million. Just dump it in one say they're giving me 5% flat per month. And then you get your fingers burnt. So do your research, ask questions, and start little by little. Yeah.
So the next one, what did we discuss next month?
Investing. Okay, so we just had questions on investing. We had our guests. We threw it open.
So we
threw it open.
Our audience, our listeners send us questions before.
And it was very interesting. Those questions were, in fact, they put us on the hot spots.
Yes, they did. I was really enlightening. We, went around, spoke about various stuff, and answered questions, and it was
very
insightful.
I think majority of the questions that we got within that period was mostly around the returns.
Yeah.
So people are so I noticed a lot of things about investors. Investors are very interested in it. They want to know it in Naira and Kobo. So you can speak all the grammar you want to speak. So you get, what is the Naira and Kobo I am going to get on this, And I think we tried to break it down just a bit, because there was a lot of confusion around maybe like the fixed income fund, the money market fund and all that. So we just try to break it around and make people understand that you can still talk to your wealth advisor, and we can let you know what is obtainable, right?
Yeah.
November.
Ember to remember. So
the hot topic.
The hot topic that
we had to take it again in December.
And we might take it again next month.
Yes.
Because it's a question that's still on everybody's lips.
Everybody.
It's even on my own lips too. Nobody seems to fully understand. Each time Taiwo Yedele comes out to speak, people will just send me clips.
You have more
videos.
Questions.
People will just send me UG. Doesn't mean this is, what can I do? XYZ. Am I paying tax? How can I claim tax break?
So the corporate topic we're talking about here is tax and tax reforms. That's the corporate.
That's the corporate.
That's the corporate. So we'll still take it again. We had our tax experts, in-house experts.
In-house tax experts.
Come to, talk about that. But off the top of my head, what I know is that I think the only instrument that is kind of exempt, from tax now is Eurobonds and bonds. No, bonds generally. Even treasury bills are now taxed. I had clients that did treasury bills, and when the treasury bills were maturing, they were, I said, it's not also, it's not Comercio partners. It is the federal government. This is withholding tax. You're remitting. But really, I don't think Nigerians have problem with paying tax. I think the only issue we have is accountability. Accountability. But I think this current administration is doing a good job, and we are hoping that they will be accountable for whatever tax that is remitted to the government.
Then another question that burns the heart of Nigerians is, there was even a meme about it. But when you're doing transfer, the description. Yeah, what's the name? When I did that's why the description. So I saw this meme by creator. It was like, oh, he wants to buy a bag. Oh, I'm gifting X amount of money to this stranger that I do not know.
Oh my goodness.
The person is selling the bag to say, oh, I'm gifting this bag that I'm selling to this stranger.
Then again, I can't blame people, because if you work so hard for your money, right? You know,
And they do all this description of gifts. All in a bid to,
yes. So because
avoid,
gifts are, I think,
paying tax.
pension. Also, I think pension funds are not taxed. So, for example, if you increase your pension contribution, that portion is usually not taxed, right? So, like we were saying, I don't blame people. Like that guy that made that description. Everybody's trying to protect. I worked hard for this money. I don't want 7.5% VAT or 10% withholding tax is money.
Yes, it's
or
money.
If you're taxing me on the turnover on my account, if the turnover on my account is like, say, 10 billion or 20 billion, and the federal government, this money is not really all my money, it's just money that goes in, comes out. What if, how is this, it's just crazy. So people want to know. So like you said, we are still going to take that topic again in February.
And I had a client that asked me, he serves as a middleman for companies that do a lot of servicing works and all those.
So a lot of money, funds flowing through his account.
Which is not necessarily his, and he has a corporate account, which is not necessarily his. And
Correct.
asking me,
Correct.
Eugene, a month, 1 billion can pass through my account. But that 1 billion is not for me.
It's not my own.
They just pay me, I'm a contractor, I pay.
My subcontractors,
I pay my
correct.
subcontractors. So does it mean federal government to count this money as revenue generated by my company?
Oh my, it's crazy.
So it's crazy,
I
really.
also had a client that asked, I said, look, Taiwo, now, because prior to now, commercial partners, we used to quote our rates in net. That's net of withholding. And why? We used to do that to, so that clients are not double taxed. So whatever income you get to in your account is your full income. And then when your tax auditors come and they decide to do all that to audit your accounts, the 10% withholding tax on the income can now be charged. But now we've started quoting our rates in gross because we've been mandated by, regulatory bodies. So I had this client reaching out to me and saying, Taiwo, when you guys have charged me 10% withholding tax, I say it's not us. We are not the one charging you. She now said, okay, I understand. But now, this money is now paid into my account, less withholding tax, right? That when it hits her account again, she leaves in an account, say, for like 5 months, maybe in a savings account in the bank. And the bank now looks at her turnover. That money has increased the turnover on her account. The bank will now she does not double tax. I say, madam, really? I can't really answer that question. All I focus on is...
to join the next session of Tuesday morning.
So she should join the next session of Tuesday. So this can help her answer. We're having our expert come on board again. Because there are a lot of gray areas around this. So
a lot of gray areas.
Yuji, I think that's all.
Yeah, that's a wrap.
That's a wrap for the year 2025.
Year in review.
Yeah.
So if you notice, a lot of high impact knowledge has been dished out.
Correct.
Just from the recap. So imagine what you have missed on. But good news is you can still go back and rewatch, re-listen to all those episodes. They are available on Spotify and YouTube. And this just to tell you that you do not want to miss Tuesday Morning Talk going forward.
Yes.
The year 2026.
Tell a friend to tell a friend to tell a friend
to tell a friend.
Yeah. And I think just to buttress what you said, I also like to first of all say, also additionally say thank you to all our, very frequent and, loyal participants. You guys actually made 2025 worth the while. Our first topic in 2025, like we said in the recap, was setting financial goals. Guess what? We're not going to take that topic again because we expect that you should set your financial goals. So please, go ahead, set your goals, write it out, make it plain, and scan our QR code. Call us, call the Wealth Advisor. We'll help you and hold your hand through the process so that you can reach your, monetary, financial, or your financial goals for 2026. Yuji, do you have anything to say?
No, Taiwo said it all. So it's a wrap from us.
Yeah. Thank you once again.
Thank you once again.
So join us again at the last Tuesday of every month. So the next last Tuesday for the month of February, and every other month for another session of Tuesday Money Talk, where we try to break down investment and finance in very simple layman terms. Thank you, guys.